Good afternoon. Today is Thursday, January 26th. The time right now, Singapore is 1:24 in the afternoon. Overnight on Wall Street, everything was quiet on the Western front. Basically, it's essentially waiting for tonight's release of the US fourth quarter GDP. And until that release, the market is basically just treading water, waiting for the release. So we can see overnight on the Dow Jones itself, there was no major move. The market actually opens on a softer note, but closed higher towards the closing of New York trading. So the height remains at 33,782.9 so far this week. And it'll be very interesting to see what the release of the GDP will do to this particular to US equities. Okay, but there is that danger of continued strength going even after that release of the GDP. So that is the near-term risk. But however, because we're coming to the end of the week, there is the risk of a closer a move higher in the early part of the day, but watch out for the closing. If it closes on a weak note, that could set the stage for further decline going to Friday. Okay, over the S&P 500, we also saw the same phenomenon. We saw the market actually opens on a weaker note, but towards the end of closing on New York, it actually rebounded to close on a high note. So, but it basically closed unchanged. Okay, so getting ready for the release of the GDP numbers tonight. So by and large, we can still see that the risk of the market challenging the December high at 4,100 is still very much alive. Okay, so we want to see how far it can go. But again, look out for the closing price towards the end of this week. Over the Nasdaq, we can see the similar move. Okay, with market so high remains at 11,918.8 as a high for the week. So this level is not very, very far from the December high of 12,166. There is the possibility the market will challenge this 12,166 going forward. But again, it's going to be very, very key because we're going towards the end of the month itself. Okay, next Tuesday will be the last day of January, so we will be very interesting to see how it closes on the month-to-month basis. On the Asia itself, we can see the Hong Kong market has actually been very bullish because it has been closed for 3 days. Okay, this week, and the market is just playing catch up. The high traded this morning was 22,475.11. It has already taken out the June high of 24,449.3, and now it's gunning for the April high of 22,523.6. Okay, I think there is a real possibility it will even take out the last April high and continue much higher. We will have to see how this thing develops as the days goes by. And over in Shanghai, we can see that same thing. Market has been closed for the last 3 business days, and now it's playing catch up. The high traded this morning was 3,267.06, and this is the highest it ever been since September of last year. And right now the market is definitely going to try to challenge this last August high of 3,308.35. Now this is going to be a key level because to me that is a level that represents the invalidation point of this bear market here. If this market, if prices can take out this 3,308.35, then the market will go into a bullish mode. So the entire structure and the sentiment behind it could actually change dramatically from bearish to bullish. So do watch out for this 3,308.35. Over in the Nikkei, we can see that the Nikkei prices actually attempted to go higher. The high traded was 27,502.15. And now market is pulling back a little bit. I think it's quite healthy for the market to pull back because this market structure does appears to be, this is the third wave, and possibly any extension could also remain a possibility, but I think a little bit of pullback to let me see the fourth wave development. I think that will set the stage for another push higher, perhaps to challenge the December high 28,195 in the days ahead. Over in the foreign exchange market, we can see the dollar, after attempting to break out of the falling price channel, traded to a high of 131.11 on Tuesday, now has basically pulled back and then basically back within the falling channel. And going forward, there is that risk the market may continue to drift lower and in search of a direction. Over in the euro versus the dollar, we have another push higher this morning. We can see the market challenging the week's high, which was last traded on Monday at 109.27. This morning, we have the same level being traded, but there is still no breakthrough for now. But because the price is trading within the rising channel here, and the fact that it's trading below the midpoint of this rising channel does give this market a little bit of a negative connotation. price right now is above 109, obviously, but 110 is going to be key. Whether it can trade and stay above 110 is going to be something that we want to watch, because if it fails to hold above 110 meaningfully, then the risk of the reversal is actually quite real. Okay, over in the Aussie market, we can see Aussie continue to charge higher. High traded yesterday was 0.7122, and this morning it attempted to test this level without breaking it. So far, the market right now is very similar to what we saw in the Shanghai Composite Index. We are very, very near now to a very key level, which is the August high of 0.7137. If this level is taken out, then again, the entire bearish structure of the Aussie versus the dollar would have changed from bearish to bullish. This is based on the 4 hours time frame. Okay, so do watch out for this particular move here. Over in the sterling, we can see that sterling has managed to go back above the midpoint of this rising channel after trading to as low as 1.12263. Okay, so again, what to make out of it? Near term, so long as it stay above the midpoint here, there is always a risk that the market may actually try higher. But by and large, I do have a negative view on the currencies relative to the dollar, because I do believe the dollar is about to turn. Although it is sporadic right now, it is not very even, but that remains a possibility. Over the dollar Canadian, we can see more signs that the market is actually building up a base. The low so far for this month was 1.3321, and yesterday we have another try at 133.40, managed to hold, and the market rebound. Now the key here is if the market can take out this near-term resistance line. If it can stay above and close above, that will set the stage for higher dollar rates across the board. Okay, so that's one of the reasons why I am a little bit biased to the long side for dollar. Okay, over in crude oil, we can see crude oil continue to pull back after the market failed to take out the $82.66 with a high attempt at $82.64 this week, and the market pulled back to as low as $79.45. So there is the real risk market will continue to edge lower, but I think this is still remain a very bullish market, so do watch out for this pullback here. Okay, this pullback here, maybe one of the reasons why crude oil cannot continue extending higher could be due to the fact that the natural gas prices continue to dip lower. So there was this initial attempt to rally, but this rally has been negated, and now the price as of now is trading at $2.88, which is actually historically speaking very, very low. And I suspect at some point this month, okay, we still have a couple of days before the end of the month of January. Next Tuesday will be the end of this month, and somewhere in the next 3 trading days, I think the market could find a more durable bottom, and I'm waiting for sign that the market is going to rebound. So watch out for that rebound, because this rebound can be quite substantial going forward. Okay, over in precious metal, we can see gold remains very, very elevated at $1,949.16 this morning, and I think this is got to do not just with economics. By looking at what's happening on the war in Ukraine, we have seen that the NATO has actually members of NATO has actually agreed to send more offensive weapons into Ukraine, in particularly their tanks. Okay, and now we have seen that many nations within the NATO has agreed to send advanced tank into Ukraine. And that could actually raise the temperature in the war in Ukraine, because Russia is going to see this as a direct assault, or more or less a direct participation in this war, because we have to understand this new tanks, these tanks that are going into Ukraine. Definitely the Ukrainian armies are not trained to drive these new tanks. So who is going to drive these new tanks? Okay, so if there is evidence to suggest that these tanks are crewed, okay, by NATO armies or soldier, then that will mean to the Russian a direct participation, and by then the glove will come off, and that could actually cause this war to go out of control. So I think gold is reacting this anxiety in the marketplace that this war is not going to end anytime soon. That's obvious. In fact, it's going to escalate. So prices of gold is reflecting this anxiety in the marketplace. I think this is the reason why gold prices refuse to come down, despite silver prices pulling back. Okay, so now when we look at silver, silver actually pulls back to as low as $22.76, and but because of the rise in price of gold, it also rise in sympathy. Market rate traded to just under $24 last night before it pulls back from this near-term resistance line. If the market can clear this near-term resistance and punch beyond $24.55, the pullback is over and the market is getting ready for another leg higher. So by and large, when we look at commodity prices, we can actually get the sense of where the war is in Ukraine is likely to hit. Okay, market do not believe that there's going to be any de-escalation as far as the war is concerned, and the market, as far as precious metal is concerned, is reflecting this reality here. Over in cryptocurrencies, we can see Bitcoin this morning actually rallied, okay, to 23,825.8, and this is the highest it ever been for the last 5 months, and this is setting the stage for higher prices. But the funny thing is, after trading to a high of 23,825 this morning, it quickly pulled back, and there is a sign that this is possibly a reversal signal, okay, because the other cryptos did not follow through. At least it's not even. Okay, there are some crypto that actually traded to a new high for the week itself, but not all across the board. Okay, for example, we can say that Ethereum did not follow through. There was a rebound, but this rebound did not take out last week high at $1,680.60 or at 70 cents. So you can see that this market did not follow through the way the buyers in Bitcoin have been trying to push the price higher. Okay, so this is a sign that it is not even. Okay, it means to say that this rebound is not even. We see the same thing in Ripple. Ripple also went up to also experienced a surge this morning to 0.4246, but did not quite take out the week's high at 0.4330. Okay, so you can see this is not even at all. Okay, when we look at Cardano actually followed through, very similar to Bitcoin. It actually registered a new high for the week itself at 0.389, and right now it's at a critical point. It is right now it's sandwiched between this support line and this resistance line. Now the market needs to clear beyond this resistance line and stay above to give us any near-term bullish sentiment. Okay, so we have to watch how the market reacts later as the days goes by. Okay, over in Solana, there was no follow-through buying. The market actually bounced to $25.42 this morning, but that's it. Okay, to be able to confirm the market is on the way higher, it must take out $26.55. So far, it has not happened yet. I'm not saying that it will not happen. Tonight, we're going to have the release of the fourth quarter GDP for the US markets, as well as durable goods. And we have to watch how the market reacts upon the release of those data. And there's a real risk the market may actually extend higher and then pull back down. The key here will be how it closes by Friday night. Okay, so do watch out for the closing this week, and then that could be pivotal. Okay, thank you very much, and I'll see you again tomorrow. Bye-bye.